Hey, what's happening? Trader Tim from EminiMind, back from a nice little hiking vacation in the Colorado mountains. It's nice to take some time off and kind of recharge. August is a good time to do that because we tend to have kind of a wonky month at times. But we're back doing another market analysis video. I'm going to run through a couple of trades that I had today and talk about the week ahead. So there wasn't any news on the calendar today. If we go out this week, we've got some stuff tomorrow, business inventories and housing market index at the top of the hour. So we'll be doing a live trading session. You can tune in if you want. EminiMind.com/VIP is the link for that. Wednesday, the FOMC minutes come out in the afternoon, and then jobless claims are before the bell on Thursday. So a couple of bits of news, but nothing huge. If we start with the daily chart, I've actually got a weekly chart up so that you can see this is a great case for drawing an extension using the Fib retracement tool. And so we got our all-time high, not too high above us here on the ES. And this was the retracement we had been sitting in. And you can see the negative 23 is right here. And then the negative 61.8 is kind of the extended target. And when we make it to that point, that's when it's a good time to draw an extension. So rather than going from the 50% near the entry up to the new high, what you want to do is draw an extension, which means you go from the high point of where your prior 50 is anchored to, you're grabbing from that point to high. So instead of a low to high, which is a traditional long retracement, you're drawing a high to high. And you can see this other retracement in here that we had came down and touched week prior. And then last week we kind of came down. I've left it up here because we came down, but notice how we did not close below the 61.8. And for those of you who've been following for a while, you know that on the daily chart, the larger time frame, the close is much more important. Whereas intraday, it's in a lot of respects less important. So if we pierce a 61.8 intraday, I'm going to go ahead and consider that the move failed. We have a lot smaller amount of trades taking place on, say, a 5-minute bar versus all of the trades that take place on a daily bar. It's an entire day's worth of trade. So if we rally into the close and we don't actually close below the 61.8, that's actually pretty bullish. So I'm going to leave this up until we close below the 61.8. But you can see that extension that we just drew is right here, 44.21. So even if we come down below the 61.8 and close below it, we do have this support pretty close. 44.21 is 60 points, 70 points away from kind of where we're at right now. The other thing to note, if I get rid of all the drawings, you can kind of see these prior highs. That's about where we paused last week, and then we've kind of dipped below, but this could act as some support as well. So I'm not overly bearish at this point, even though we've pulled back just a little bit off of highs. If we go to the trend lines, which we talked about in the last video, you can see, what do you know, we're right at this kind of mid trend line. And we just talked about when we go into a steep run up like this, where we're hugging along a trend line that had started kind of shallow back here, and then we got a little bit steeper, and then here just kind of our third trend line up, and we start to break that trend line. Well, a move kind of not necessarily straight down or overly bearish, but the last week or two, we've had some up days, had some down days, but in general, we just kind of drifting our way towards this next trend line. So some support there as well. All in all, August is usually not a huge mover month. A lot of folks are still on holiday, vacation, kids are going back to school. So it's really, as we get into September, traders get back in their groove. More so businesses and things start ramping up again. We got the Fed meeting announcement coming in the third-ish week of September, so that's when things start to heat up. So from a daily perspective, I'm just kind of expecting more of the same. Let's go to today's couple of trades. Anytime I come back from like a break or a vacation, I kind of like to ease into it. And today was maybe a little bit more aggressive than easing into it, I guess, just because we had the gap down. And then the first trade right off the bat was this little hammer here, kind of dragonfly doji. But notice how the lows are the same down here. So we had a double bottom, and it was pretty early, but it was a nice clean move. We had the unfilled gap above us, and so that, anytime you're below a gap, longs can tend to get a little bit more lift, especially early, and then vice versa. If you're above the gap fill, the prior day's close, and the shorts early on can get a little bit of momentum, even if we don't make it all the way there. But this one was just a buy, one tick above the candle's high, and then trailing each candle. Here was a little double bottom. So the stop was stayed here. Then we had these inside bars, and then I just left my stop here below 74. Up here we had a double top. You could move your stop up underneath that candle if you wanted to, but nonetheless, that was just shy of 2 points for that guy. The 15-minute opening range breakout. At first, it broke to the downside here, just briefly. And let me actually go to that chart. Get rid of some of these lines. So actually, I'll get rid of everything. We'll redraw. So this was this first candle, the 15-minute opening range breakout, broke to the downside early, and so that ended up stopping the one direction. So it was an 8-point candle, pretty small, broke to the downside and immediately reversed. So I took it for a long once we came to the top end of the candle, and that one got its 20 points up over here. So not too long ago. Still got a couple hours in the day here, about midday, as you can tell by the candles here. So first one was minus 8.5, and then a plus 20. So you still net over 10 points on the 15-minute this morning. So that was the 1 minute, the 15-minute, and then we had a little micro, which I wanted to highlight here. One thing you'll notice this morning was we were getting these high ticks at high price, and then we would go higher. And so well, let me back up. Before we do that, we had the retracement from low to high, and that one did a 52, I believe. Yeah, 52. That was not a high tick. Here's 52, 652, and 651 was the high tick. So this was not a high tick at highs. We moved down. I'm going to get rid of this drawing because that is just the 15-minute mark. We came down to the 50%. Rather than taking it right at the 50, which you can do when the distance between the 50 and the 61 is smaller than 2 points, so that your stop is going to be outside of the 61.8. You can draw the opposing, so draw the short, let that break, and then come in here and take a little micro long off of that level. And it's okay to take that long because we did not have a high tick at highs. If this was a high tick at highs, meaning a high nicey tick lined up with high price, then that could end up being the high of the day, which we'll talk about a little more in here in a second. So this 44.75.75 traded long. I ended up bringing my stop up to break even, got a 3-point first target, and then got taken out when we kind of retested the 50 here. So that one didn't end up running super far with that particular entry. But what I wanted to highlight here, if I mark the 30-minute high, we got a high tick at highs at 702, which was here. And so I chose not to take these next two as longs. Same with this one. We had high tick at highs. When you get a high tick at highs, you don't want to just short right after that. You want to look for a swing low break. And so, yes, I didn't take this as a long down here, and you say, well, I missed out on the long, but I also prevented myself from taking a bunch of stop outs by shorting all these pullbacks. And in a lot of cases, passing on a losing trade is much just as valuable as cashing in on a winning trade, but you're not really recording the trades you didn't take. And so from a trade log perspective, they don't really show up as much, or as prominent. But it's important to wait for a swing low to break before taking a short when you get a nicey tick that lines up with high price. And so the key takeaway there is, yeah, it's okay if you miss out on a long trade, or miss out on a winning trade because you have a high ticket highs like that. But don't just rush in to go short, because each one of these started, we made in high ticket highs and we broke highs. And then I was ready to take this one, and then bam, we got a high ticket highs. So this guy here did not make a high tick. It was 709. And if we go to 709, that was down in here. So that one was clear to take 44.81.50. And that rode you up to the gap fill here. It's important to keep an eye on the prior day's close and just make sure that you have enough room between the entry, if you're going towards that gap fill, and like a 3-point target. So the gap fill was 44.86, and the entry down here was 44.81.50. So you've got plenty of room to get your 3-point target and then start trailing your stop, if we're going to reverse right at that gap fill. And we kind of went sideways, more so in a bull flag, but it was a little bit choppy here. So you want to make sure that you're not like 2 points away or a point away from the gap fill getting into a trade, because if price is rejected at that level, then you don't even get your first target and you end up taking a stop out. So those were a couple of the trades from today. Just kind of, I guess, getting my feet wet in all of our setups here to start the week. So more than happy with that, to walk away with a couple of winners. Tomorrow I'll be doing a live trading session, trading all week. You can pop in the Discord if you have questions or drop them in the comments below. Hope you have a great week, and I'll talk to you all soon.